Why are people suddenly talking about yen? And why is a move in Japanese bond market making companies like Nvidia and Microsoft fall? The simple answer is the yen carry trade. Let me explain it. Imagine you can borrow a hose that's completely free. You use it to water your fields, you grow crops, and then you make profit. In finance, for years, investors could borrow in Japanese yen at nearly zero interest rate. And they use those funds to buy higher return assets somewhere else. And that's yen carry trade. Borrow cheap yen, convert to dollars, buy things that pay more or can increase in value over time. And that's it. That's like one of the major sources of global liquidity over recent years. But where do traders park all this borrowed cash? In the most liquid, highest growth AI mega caps like Amazon, Nvidia, Microsoft. These stocks are huge, easy to buy, and they sell fast, and they have been the market's favorite growth stories.
Now imagine that the hose owner wants it back or makes it expensive to rent it, so we gotta pay him.
In real markets, it happens when yen strengthens. So borrowers now instantly have to pay back in yen. And to do that, they need to sell something that they can sell instantly. Which means they're most liquid assets, and what sells faster than the AI mega caps? The forced selling pushes the prices up and drains global liquidity. Tighter liquidity results into weaker capital flows, which means weaker local currencies and thus higher import costs. It worked for Japan in the era of deflation, but now, since the inflation has crept in, the story has changed. Japan is done being the world's ATM and is now going several challenges with the new government. Bank of Japan has kept the yield close to zero, even though this led to a structurally weaker yen.
And this cash 22 of Japan has caused the market see its worst sellout since April 2025 earlier this year with Trump's tariffs.
Japan's crisis is not the end of the global cycle. It's actually the beginning of the next policy pivot. The Bank of Japan actions will drain liquidity, tighten funding conditions, and destabilize risk assessments in the short term. So for investors, the first few months can be volatile. But this environment ultimately sets the stage for the renewed upside in 2026.